I will demonstrate to you today the short-term and long-term valuation upside in this company. BCI is based in Perth, Australia, listed on the ASX exchange. Market cap of $60 million, of which $36 million cash and zero debt. We have one large shareholder, 28%, who is one of Australia's 10 richest persons, Kerry Stokes, owning 28% of the company. The share price on the chart on the right has been flat for the last 18 to 24 months, very limited movement. Unfortunately, not much liquidity in the stock either. The two key assets that we have that I will briefly talk about today is this working? No. It's a Mardie salt and potash project on the coast of Western Australia and an operating iron ore mine where BCI gets royalties from on a quarterly basis. So covering the royalty side first, it's quarterly royalties. Our partner is a big mining services company, Mineral Resources Limited. There's still 95 million tonne of ore reserves. They mine at 7 to 8 million tonnes per year, so there's a 12, 13-year mine life left. Very good lump proportion, 60% iron the lump, 58% defines Fe. So the two bookends of our royalty earnings was $6 million in FY18 and $18 million in FY17. That's the BCI EBITDA royalty. After cost is what we received from that mine. There's significant upside in that royalty, in that MinRes is considering building a light rail system. If they have built a light rail system, the minimum royalty payable to us will increase to $1.60 per tonne. The production rate will go to 15 million tonnes, and we believe that our royalty on an annual basis will be $20 to $25 million per year. So there's very significant upside just on the announcement of that light rail system, which we expect by mid-year. BCI has a very positive development track record. The company has developed Greenfields project, the Nullagine joint venture, operated it for a few years, paid $100 million dividends to shareholders. As I just explained, the Iron Valley mine is operating at the moment, and we're getting really healthy royalties from there. The next big development project for this company is into the industrial minerals. We are busy divesting most of our iron ore assets, and we are focusing on a salt and potash project on the coast of Western Australia. So I will very briefly show you a 2-3 minute video to show the salt market and how we have confidence in the salt and potash markets. No sound? No? So BCI bought these tenements about 3-4 years ago, and we developed it at a relatively modest cost to the point now that we are ready to finish all the studies, finalize all the approvals, and move forward with development. The market for salt is a very interesting one, and there's some similarities to the iron ore market about 15 years ago in China, where there was an absolute sudden growth in the iron ore demand from 2002 to 2008. So we see between 2017 and 2027 a huge increase in the demand for high purity salt that goes into the chlor-alkali industry in China. The chlor-alkali industry need high purity salt, 99.7% NaCl, for the production of all these products that was shown in the video. So most of that will come, most of the growth in that segment will come from seaborne high purity salt, and that is from India and Australia. And we believe our project is part of that growth story. In Australia, there's 5 large salt operations that's been operating for 30-40 years on the coast. They are all owned by large companies. The Japanese trading companies, Mitsui, Marubeni, Sojitz, and Rio Tinto, they own all the existing salt production in Australia. So there's no Chinese salt ownership in Australia at the moment. The SOP companies are all based about 1,000 kilometers inland with a different method of extracting the water from ancient paleo channels, as opposed to our project that will draw water from the ocean, inexhaustible resource. So as the video showed, we have a series of 8 ponds over a 20-kilometer area, ideal mudflat conditions, impermeable soils. We don't need any lining on our ponds. The soil conditions, we spent $2 to $3 million already drilling geotechnically the soils, and we are very comfortable with the soil conditions. So basically, the water will flow, concentrate through the different ponds. Once it gets to pond 8, it will go into the salt crystallizers. It will settle as NaCl through a wash plant onto the jetty and export it. The potassium-rich water will then go to a potassium crystallizers. The potassium salts will crystallize through a potassium plant, and SOP fertilizer will be produced as a byproduct. So Mardie will be predominantly a salt project with 30% of the revenue and the margin coming from the SOP as a byproduct. We are aiming in the DFS to establish the case for 4 million tons of salt, 100 kilotons per annum of SOP, with significant EBITDA of $130 million over 63 years. Inexhaustible resource, we can mine it for the tenure that we have on the tenements of 63 years. Mardie will be at the low end of the cost curve on salt, and given that it's a byproduct and all the cost is sunk against salt, it'll be probably the lowest global producer of SOP on the cost curve. We are aiming at the end of the year to have all the environmental approvals and the funding solutions in place to proceed with construction. Our major equity shareholder is giving us the assurance that they will fund the $200 million equity, so we need to come up with a $200 million debt to fund the project. We believe there's a strong market, we have a tier 1 asset, and we have the support from a major shareholder to make this Australia's next large project to produce salt and SOP. Thank you very much.